In question 15, there's a lot of dates in these, but dates are critical and you've got to go slow with them. Nancy's a calendar year taxpayer, filed her tax return for the 07 year, which was due on April 15th, but she didn't get around to it until May 1st of 2008. So she was like 2 weeks late. Nancy did not request and therefore did not receive an extension of return to file for 2007. Nancy paid the balance due on June 30th, a little bit later. Based on these facts, the last day for the IRS to assess additional tax with respect to her 2007 return is when? Well, it's the later of the due date of the return of the date it was filed. It was filed on May 1st, so therefore it's 3 years from that, so it should be C, May 1st, 2011. Okay? So that's kind of a straightforward type of problem for statutes. I like it in that regard. Here's one that's a little bit different. Take a look at question number 11. On question 11, I actually drew a little timeline up here about Wesley filing his return, and he filed it in 06, which is the 2005 return was filed in 06, and under normal circumstances, the 3-year statute would run, and on April 15th of 09, that's when the statute of limitations would end. So that's your 3-year statute. But in the middle of that, he got audited, and he signed an agreement about the proposed changes. He got the revenue agent's report, looked at it, agreed to what's referred to as a deficiency assessment. Upon signing that, he agreed, and then he paid the taxes on that. That the audit was on October 31st when he got the assessment, and he paid it on December 31st of 07. And the question that this says in 08, he discovered the missing records that he believed which should make the assessment erroneous. And therefore he wants to basically file a claim for refund by filing an amended return. So the question comes up is, when does the statute of limitations run? Would it be the April 15th of 09? And the answer is it's 2 years from the date that you pay the tax. So from December 31st, 07 to December 31st, 09, that would be his 2-year period that runs. So therefore that would be, as I'm looking at this, C, 2 years from the date when the additional tax was paid. So you can see from a tax return that was filed back in April 15th of 06 that goes all the way to December 31st, 09. Why is this important? Because as this taxpayer files a claim for refund on this day, let's say, or sometime in here, then the IRS is going to get it, and they have to review that to decide whether or not they're going to accept it or not. So he still gives them that time frame. There are other things in the statute of limitations beyond this that go, what other things that extend the statute. That's usually beyond the scope of the exam, especially if you're going into court and you're extending the time. We'll be talking a little bit about that as we go forward. Up on the screen, I've got one more question for you. Ned, individual income tax return, was under the IRS exam. 5 months before the expiration of the statute of limitations, the revenue agent wanted Ned to agree to extend the statute. Generally, the revenue agent must advise Ned that he has the right to refuse to extend the statute, and if he does not agree to the extension, the agreement can be restricted to a particular issue on the tax return. And that is a true statement. Another word that I just want to share with you, I said earlier, if you see the word however, that oftentimes means that we've got a false statement. And then another word that we use that makes things oftentimes true in their statements is the word generally or the word usually. Because oftentimes you're sitting like, I can think of an exception to this, but generally it's true. So if you see your multiple choice questions that say generally the following whatever are allowed, then don't go nuts on some bizarre exceptions. They're looking for the general rule, so that they do have to soften those up a little bit.